Hey guys, it's Cameron here, aka the Currency Kid. I just wanted to give you um, really something to think about in the next couple years when it comes to Bitcoin, the release schedule, supply and demand, etc. And of course, this isn't financial advice. I'm not a financial advisor. This is just something that's been on my mind lately and what I'm seeing, and just kind of wanted to put it out there and get a reaction and see what some of you guys think as well. And this is actually why I may actually move some more of my holdings over to Bitcoin. So let's see, I cut this graph off a little bit here. There we go. So all in all, there's going to be around 21 million Bitcoins mined throughout the lifetime of Bitcoin. And starting from 2009, you can see how the release schedule of Bitcoin tapers off. It's higher initially, and then it cuts down quite a bit as time goes on. Right now, we are midway through 2018, so you can say we're right about somewhere around 17 million Bitcoin have been mined so far out of a total 21 million. So in the next, uh, really 17 years, 15 years, there's going to be another 4 million Bitcoin mined. Of course, that tapers off here. So a lot of this comes down to simple supply and demand. Just imagine all the gold out there right now. Imagine if the same amount of people buying gold now stayed the same and the amount of gold doubled with the same amount of people trying to buy it. Well, the price of gold is going to decrease because there's um, the same demand but way more supply, and vice versa. If the same amount of people were buying gold and gold, half of it disappeared throughout the earth, the price is going to increase because there's the same amount of people buying less of gold. So very similar correlation here with Bitcoin. Just real quick, a lot of people think that that 2013 to 2015 range where Bitcoin was on a downslope or trending sideways. A lot of people think that was due to the fact that there was a ton of inflation. A lot of coins being issued and supplied, and there wasn't a lot of buying pressure. So that's why a lot of people think there was a little bit of a downturn with the Bitcoin price, especially if there was less people buying due to some FUD like Mt. Gox, etc. hacks. But let's get to where we are now. So halfway through 2018, we're at 17 million, about 4 million tokens left to be mined. Go over here. See, really what this comes down to is the simple supply and demand. Let's just say that each one of these crappily drawn circles represents a million Bitcoin. So you can see there's a total of 17 million out right now and available. Out of circulation, what I'm saying by this is these are coins that are these are tokens that are not being sold on the open market on exchanges. Maybe a couple million of these, I forget the exact number, but some Bitcoin have been lost forever. There's no way to obtain those private keys, so those Bitcoin are really gone and off the radar completely for the remainder of time. And the other may just be held up between investors, holders, example. So just imagine there's 17 million Bitcoin out there now. All of them aren't freely tradable and exchanged on exchanges. A lot of them are lost or held onto. So when going to buy and sell Bitcoin, the only supply available for a price to be based on is what's available, right? So currently, let me change the color here. Bear with me. Let me get green. So people that are buying and selling Bitcoin, they're buying it based off this pool here. Those are the coins that are in circulation as far as what's being bought and sold. These are off the market and are parked to the side. So what does this look like in the future? Let's just fast forward another few years here, and let's just say we add another 2 million tokens onto the exchanges, right? Or another 2 million Bitcoin are being mined, so they're available. Let's say they're not being held, hodled, or lost. Let's just say they're out there being bought or sold. So this is the pool available where the price of supply and demand is met. Okay, so where does this come into play? Imagine a Bitcoin ETF gets approved, more institutional money gets brought into the picture, more people from nations such as places with hardship, Venezuela, Argentina, Greece, etc. Let's say an influx of that money and financial institution money buys more Bitcoin. Um, those Bitcoin being bought, especially with financial institution money, there's a very large chance that those, people buying Bitcoin from financial institutions, they're not going to be bought and then heavily exchanged and traded. So let's say some institutional money comes in and they buy up $2 million worth of Bitcoin, just as an example. So let's say they buy $2 million worth of Bitcoin. So now that Bitcoin is out of circulation when it comes to the markets and it's locked up. These funds right here are, let's just say they're not being bought or sold, so they're parked. That money is parked. Now, let's say you have the same amount of people trying to buy Bitcoin, just like in the gold analogy earlier, the same amount of people trying to buy Bitcoin, but there's less Bitcoin in circulation for them to buy. Obviously, that's going to increase the price because it's the same amount of people bidding and buying Bitcoin, but there's less. So there's the same amount of demand, but there's less supply, whereas the price will increase just based on simple supply and demand economics. Okay, let's say another couple years go by. What are we at? 20. Let's just say we're at our total 21 million. The most Bitcoin that can ever be mined. Let's say more institutional money comes in, and then Bitcoin proves to be a great store of value. People develop it, and it becomes a transfer of wealth as well, and it becomes really a digital gold. So let's say more people buy it. So there's an increase in the demand for Bitcoin, but at the same time, let's go over here. But at the same time, you have more people that bought Bitcoin and potentially took it off the shelf and aren't buying and trading it. They're holding on to it as a store of value. Bear with me. Okay. So now you have more institutions, more people that bought Bitcoin, whether it's for investment purpose, a store of value, people that are holding on to it. So you have more Bitcoin that is locked away, being hodled, less Bitcoin being bought and sold. And when more use cases for Bitcoin are came upon, when more people start to adopt the technology, you're going to have an increase in demand for Bitcoin, but there's going to be less Bitcoin being sold because a lot of it's been taken off the market. That doesn't mean some of this Bitcoin can't be bought or sold, but typically when institutions buy up assets, a lot of it is, especially in an instance like Bitcoin, it's going to be treated as a store of value, so and a hedge in their portfolio to be held on to. So really the point I'm trying to make is we've already seen 80% of the supply schedule of Bitcoin is going to be tapering off pretty severely the next couple years. The money that I see going into the space, I don't see that money buying Bitcoin and day trading it or swing trading it, so to speak. I see that money being parked as a store of value, as a hedge, as a long-term investment. So as more money comes in through the space, I believe more Bitcoin is going to be bought and held away from circulation as far as exchanges are concerned. And then the wider the adoption, the more people that rush into the space, you're going to have more people that are bidding and trying to buy a smaller amount of Bitcoin available, which I believe is going to see a price increase in the future. Once again, not investment advice, just something I wanted to bring up. It's something that I'm going to have my eye on in the future. Looking forward to the August 10th announcement if a Bitcoin ETF is going to be approved. And yeah, that's my thoughts. Let me know what you think.